Good morning, good afternoon, and good evening to those of you around the world. Welcome to Trading Rebellion with your favorite analyst from Trade the Chain. My name is Nick Mancini, Director of Research at Trade the Chain, joined by Monte, Senior Research Analyst. CJ, unfortunately, had a couple of appointments today, so he's not joining us, but he is, of course, with us in spirit and gave us, some of his analysis and trades this morning. So today is probably going to be a bit of a lighter Trading Rebellion session. We are in the first official, Trading Rebellion of the month of September. But there's not really been too much news that really pertains to kind of what we like to talk about. I mean, the big news on the horizon, of course, everybody's waiting for more inflation prints, more unemployment data. That's kind of what we're all patient for. But the major news that's circulating right now is around, the auto workers union and the fights with, the auto worker conglomerates, Ford, Chrysler, whatever. And then the Apple story with China, I think China government officials being, asked or I guess told, there's no asking in China, to not use iPhones for government work.
Yeah.
I think if you are a government official, just don't have an iPhone, which is an interesting story, but not really kind of on par for what we talk about. So if someone wants us to chart some auto worker or auto companies, if someone wants us to chart Apple, we'll definitely dig into that, but not really worth talking about in the context of what large cap or equities indexes are doing, or what large cap cryptos or even altcoins are doing as well. So what we are going to start with today is what we typically start with, because I think this has definitely been impacting price action on the macro scale. It's just important to talk about, considering we haven't, caught up in a week. And definitely want your thoughts here, Monte, as well, because this has really been a slow grind. And obviously, if we look at the equities charts, slow grind higher. I'm obviously looking at things on the 12-hour scale, so it's not going to look, exactly one-to-one, because I'm on the 1-hour scale for equities, but slow grind higher for DXY has, led to slow grind lower for equities. And we are, of course, above this high from back in May, and kind of we're staring down this high from March, which is about 105.9, 106, whatever you want to call it. But this does seem to be inching higher. But I think, Monty, the question always is, with the volatility that we've been experiencing, DXY inching a little bit higher today, and so are equities. But if this is, this pairs back a little bit to mid 104s, high 104s before kind of launching higher into the 105s, that could certainly give some relief to risk. And although the kind of the September statistics are typically bearish, I think equities are down, I think about 0.7% on average over the past 80 years, and have not fared very well over the past 3 years, down multiple percentage points. So I think a lot of people are kind of expecting the bearishness, and we're seeing it early, but that doesn't mean we're going to be down only all September. It doesn't mean that if you're just shorting for 30 days straight, you're not going to be sweating or stressing a little bit. So I know you took, you had a bit of a long bias today, and I also warned we definitely could see a pop in the morning. But is DXY moving higher of your utmost focus right now? Do you think it will move higher? And are you using this as kind of a gauge as we continue into September? You're on mute, Monty.
Apologies. I always think it's an important gauge to watch for. So yeah, I'm looking at it quite closely here, and that 105 level is very, very critical for DXY. But going back to that point that you had highlighted in June there, where we saw resistance after what was a really strong run. Yeah, right there. I could see very much a scenario where we get some risk on price action. The dollar falls a little bit, more so that, lower green line you have there. We get some consolidation below 105 before breaking above that level. Now, the reason I think that is because this morning, the NASDAQ open and ES opened down big time. Like almost the NASDAQ was down, I think 1.7% on the open, but has since rebounded. And what I think happened there was essentially just a rush to get short, and shorts getting squeezed out. That's why we're seeing positive price action here. Do I think someone's coming in and hero buying right now? No. I think what's happening is anyone that saw the massive negative price action to start the day try to get short. Those shorts didn't end up working out. Price went up and they had to cover, and they're going to continue to have to cover, until we get back up to, previous levels. So I think that we could see, the dollar fall in the coming days here, a little bit of room for risk on price action. But then ultimately, once we get above that 105 level, Nick, I think, all bets are off and we have a pretty bearish month of September. Last point I'll make is like something that I was talking with the members of our Discord about is kind of the similarities. If you look at the NASDAQ or even ES from like a daily perspective, how similar it looks to like the Livermore cycle, and kind of how reflective, we're at that point. We put in the lower high after a period of what some consider to be irrational exuberance. That lower high there would be the 12 point, and that would be the confirmation that you would need to enter a short position. So there's been so many bears throughout 2021, and they've been frothing at the mouth to enter a short position. And I think today they may have been caught a bit off sides. Does that mean they're going to be wrong in the long term? No, but I do think they were a bit early to the party and are being forced to cover today, thus resulting in positive price action. So long-winded answer, but that's basically kind of what I'm seeing here as we look at the charts. And the great thing is like, you pointed it out, there's not a whole lot of fundamental catalysts right now, right? It's like, this is all purely technical. And from a trading perspective, I kind of like that. I can just, look at the charts, look at volume, look at moving averages. I think those are going to be important in the coming days. And without any major catalyst to push us in either direction, I think it gives more credence to the technicals, and we can kind of rely on them a bit more than we would during a week of heavy, fundamental, like news driven events like we had, in the last few weeks.
Yeah, no, I definitely agree with you. In the absence of fundamentals, technicals, always take over, and of course are always a big piece of the pie whenever you are trading, based off of fundamentals as well. But like Monte said, we do have a gap. Today's Thursday, so no big, nothing. Consumer credit, maybe, you may see some volatility around that, but it's towards the end of the day, so probably nothing that'll impact us until early next week. So that's important to look out for. But we next Monday, next Tuesday, nothing happening, but we have CPI, and this is not the Fed's, preferred inflation metric, but still will be watched very closely because, and the inflation story is really still the big one. I think investors are still convinced that no matter what the Fed does in terms of interest rates, in terms of rhetoric, if inflation is decreasing, they're more likely to enter the markets and buy risk assets. So very important to consider. Then, of course, we'll have PPI, which isn't major, but if they are going in different directions, you will see some volatility or paring back based on whatever the CPI trade is. And then, nothing major to end the week. So that's important to watch out for. But to kind of bring it back to Monte's story, definitely agree that we could see a bit of a pullback on DXY, maybe over the next 12, 24, could be longer, 12, 24 hours, I should say. But in that context, I think kind of to what Monte was saying is, this is a common formation. So everybody gets short, we have, and it's important to note that we have some bullish divergence here. Price is trending down, RSI is trending up. So that's kind of a feather in the cap for the bulls. But, we still need to break above this bearish trend. So we pull back a little bit to 4448, 4450, somewhere around there. And then maybe we get a little bit of a launch higher and try and reclaim this high right here, or this high from back in the 24th of August, which also happens to coincide with where the weekly view op is sitting, where the 1 hour estimated 200 moving average is sitting, and also, where that high is sitting. So right here, this kind of 4485 area could be a big decision zone for higher or lower, which supports that kind of head and shoulders that I was drawing in Monte's, Livermore pattern thesis. So, I think it would, we definitely could drop from here. Don't send me nasty DMs if that's not the case. But just given how oversold things are, the bullish divergence that I'm seeing, what Monte attributed to a lot of people getting shorts towards the lower end of the trend. It certainly supports the idea that a buyback could happen. Maybe this could be heading into CPI. This could be heading into that consumer credit number tomorrow, but that's something that I would definitely watch out for. And then at the 4485 level, if we get some weakness, that could be a really good short opportunity. And then maybe Bitcoin jumps above 26K on this rise, and then we short Bitcoin back down below 26K. So just kind of building ideas, because I think in Monte, correct me if I'm wrong, but if you want to have a longer term trade, you really need to think about all the possibilities and exactly where you want to snipe your entry if you're going to sit there and hold that risk. So I think that's a good idea. Instead of, you could get overexcited shorting, but I think it's better to be patient right now, because if you think about, if your goal is to short from 4545 all the way back down to maybe 4353, 4368, half the move is gone, right? And if we know our fib levels, if just kind of looking at it, the 0.38, 0.5, 0.618 is really where you'll start to see some reversals, see some chop. We're right around that 0.5, 0.1, 0.618 level. And I'll go ahead and draw a fib right here for you in case we have anyone watching who is less attuned to that. But if you'll see right now, we're literally sitting just above the 0.5 level, which is right here. So it's something to watch out for, if you are trading the technicals. So with that being said, anything else, pertaining to equities, Monte? I know you mentioned NASDAQ today, but hasn't been the most fun to trade. And I think anyone who's just jumping in today is just thirsty for volatility rather than making educated decisions.
Yes, and that's actually the point I was going to make, is that when you hear the term FOMO, we always think about like missing price action to the upside. But the same exact thing is true to the downside. People get FOMO and they're afraid of missing the move to the downside, especially people that have been bearish the entire year. If you've been pounding the table saying, we're due for bearish price action, the economy's trash, we're going to see de-dollarization. Eventually you're going to want to be right so bad that when we're at the top and we start moving down, you're going to enter that position with a lot of vigor. So I think that what we're seeing is a rush and sort of a FOMO effect, or I guess a reverse FOMO, or not even reverse FOMO, because they're just afraid of missing out on the short opportunities. But to your point, Nick, I think that there shouldn't be a rush, because it will get less crowded. I do think we could plausibly see ES move up to that midline that you pointed out there, and the highs that we previously reached. And if that is the case, that would shake out basically all the shorts from this morning, thus driving us even higher. So I think the key is going to be patience. Even if you're a bear, like, you need to be patient, because despite the fact that we opened down so massively today, you can see the effect of an overcrowded market and too many shorts piling in. It's the same story over and over. They will get squeezed out and we will see positive price action. So just because, if you've been a bear all year and you woke up this morning and you saw that the NASDAQ was down 1.75% on the open, and you're thinking, oh God, it's happening, I need to, enter my short trades. Stop, think, and wait a minute, because that's what a lot of people are going to be doing, and those shorts will get squeezed, and I think you'll have a better chance to enter than during that period of massive FOMO and volatility. So that's what I saw this morning. It's your typical trader psychology, but that's kind of the thesis I'm going on, and I'm just being very, very patient here with it.
Yeah, no, I think you're right. And I'm just I was doing a quick observance of what was happening at the lows on the hourly, and pretty much any time you get bearish or bullish divergence, I'm just going to go ahead and just draw some lines. Pretty much anytime you get oversold bullish divergence, it's resulted in skyrockets. So here's one right here, jumped super high.
Yeah.
This one down here is a little bit less direct, but I would probably have still long that, considering it was, relatively equal RSI lows. And then you have, the downward price action here. And then we have another pretty picture perfect one. Go ahead and delete this right here, which I just, outlined before Monte spoke, forming right there. So anytime we've seen, oversold bullish divergences, and typically the rule of thumb is the RSI will eventually, if you see an oversold bullish divergence, my rule of thumb, and typically, most of the time, is you'll see it go back to overbought, or at least, close to overbought, which is typically where I'll exit or target in exiting a bullish divergence trade, which, if you think about RSI already kind of taking up half the channel, which is it's at the 50 level, and it's goes from 25 to 75. If you think about it, it could get cut at 44.70 and not even make it to those highs, and maybe you get to reshort there, which is obviously the high of this move, or maybe you get up to 44.90 on a very overbought play. But I think it makes sense for that now. Do I want to enter now that we're heading into the end of the day? No. I do want to see what people do at the end of the day, because a lot of times these candles at the end of the day are correct. Obviously, yesterday that guy got beat the hell up today. But if you look, a lot of times, if someone's buying en masse at the end of the session, typically they'll be rewarded in the beginning of the session at the very least. So always something to watch out for at the end of the day. Flows on ES and NQ as well. Definitely worth watching. Let's move over to Bitcoin, even though it's been very uneventful. I mean, this is the hourly chart for pretty much the entire week, which is just absolutely sad, and is why my leverage has been stuck on 50x just to feel something. But I think I think the two numbers that I'm paying most attention to, and Monte, I'd love to hear what you're watching, or maybe you're just not. Is 26K, 2630, 2620 to be exact, just because, I'm aiming for the most touch points after the new week opens. That's how I'm looking at this. And then 25.6 has been a stalwart, dating back. I think this was the low. Yeah, this was the low from all the way back on Friday 18th. And has been a significant level on the chart, as you can see. Sweep here, tap here, sweep here, tap here, sweep here. So 25.6 has been significant, and this is basically where we're stuck for the foreseeable future. So until it gets above this, that 26K level, I'm not longing. And I definitely also don't want to short or add to shorts until, I don't want to short or I don't want to get max short until we break below 25.6. So if you know how to play ping pong and range trade, short 26, long 25.6 has been good for you, but it's been few and far between for a fantastic trade. So is there anything on this chart for you, Monte, or are you looking at maybe different macro levels for a long or a short? Because if you kind of zoom out a little bit, that 25.1 level is still significant with the low here. And then we've got this high from the grayscale news that is going to be tough to sweep, but certainly is still plausible if any savvy buyer wants to come in.
Yeah, most definitely. Do I think we regain those highs? Most likely not. I think today's positive price action is mostly on the back of shorts covering. I mean, we haven't seen that many liquidations, but still, Nasdaq's up, Bitcoin's up. It's not all that surprising. You also have stocks like Coinbase up pretty big today. But I want to actually pose you a question, Nick, because I'd really like to get your thoughts on this. I talked about it a little bit this morning in Money in Motion with CJ, but if you switch to the daily chart and you add the 200-day and the 50-day moving average, you'll note that we are nearly at the death cross. The infamous death cross that everyone talks about on Twitter, everyone and their mother, tries to short. What do you think about this? Do you think that, because this cross will probably happen, but before our next episode of Trading Rebellion, do you think we get the cross? Do you think we get that sort of price action? What are your thoughts on on this big? Because I see everyone talking about it on Twitter.
Yeah, and it's funny. I think you mentioned this too. You know, a lot of times you'll actually see bullish price action whenever this starts to form, which is funny because it is, and I don't mean to be disrespectful to anyone watching, but this is the most kind of retail technical analysis story you'll ever see in your life. You know, anytime that there's a death cross coming, The Economist is talking about it, CNBC is talking about it. They want, you know, our opinions. And I think it's hilarious because, and I think it's just because it has the word death in it. You know, nothing is as bearish sounding than a quote unquote death cross. And I think that's why the media loves to talk about it so much. But if you actually look at it historically, it's such a crowded idea that it typically will reverse on you before it actually has the chance to play out. And of course, the biggest one is it technically did play out in both ways. And I personally know a lot of people who were shorting here who got hurt pretty bad. But it definitely implies lower price action. But I also think the other side of the story is equities, you know, had a pretty steep drop. Gold also had a pretty steep drop. And although, you know, this does look like a steep drop, you know, if you just kind of erase this whole grayscale candle and just kind of look at the trend, there is really no steep drop, you know, since mid-August. And I think that's also something that you really have to note if you are continuously shorting or you're planning on a break of 25K. And I'll be honest, I've been a bear, I've been shorting, but, you know, I'm typically, you know, out of trades in a couple hours and I'm not sitting in something for days on end. But my biggest thing for what you're asking, Monte, is that, you know, with everything else kind of dumping, Bitcoin didn't, as it's nearing this death cross. And we could still certainly see something like this on maybe some Binance news, maybe an SEC lawsuit news, like something like that can still happen. But I think absent that kind of story, in my opinion, you know, barring one more push down that could, you know, see some limit bids pulled, it's more likely to buck this trend. Now, bucking the trend could look like something like what we saw here, or it could look like, you know, just a jump up to the moving averages to get everybody excited right here, only to send us back lower again, which also kind of goes with the idea of what we're talking about with equities, right?
Yeah, that'd be very similar to the move in equities. Yeah,
exactly. So I think that is the more likely opinion, and it wouldn't be unusual. Like that's classic cartel. Everybody's bullish. let's get longs right at the break of the, you know, 200 moving average, which has been a big bullish bet multiple times. You know, as we can see 3 separate times on the chart, and I will admit, 3 is the charm in crypto. If you're betting on the 4th trend to happen again, you're typically betting on the losing side, just from my experience. And I've made a lot of those bets, trust me. So that's some personal experience. So although I really don't have a read, I agree with you. And you correct me if I'm wrong, if this wasn't what you said, but I think it was, that this is a trick signal. This is something that, you know, everybody should get short on. And maybe 50 years ago, it would have worked. But now that it's, you know, so popularized, I don't think that it's going to work. But my one caveat is, you know, either SEC lawsuit continuation or Binance news, you know, Binance DOJ lawsuits or something worse are the two kind of catalysts that I think would push us down, if so.
Yeah. Man, you said everything I was hoping you'd say and more, because I'm in complete agreement. And that was really the answer I was looking for. You know, this is like a retail trap, if you ask me, in terms of like a metric, especially since, like you said, you'll see it plastered all over CNBC and Twitter. So I could definitely see Bitcoin showing comparable price action to, you know, what we're predicting for the equity markets, where, you know, people get off sides, they try and short the market with some vigor, only for us to move back up to the moving average and then get rejected, and those bears kind of miss out. So that's yeah, I'm glad I asked you that question, because you basically said everything that I was hoping you would.
Yeah, and I'm kind of glad we discussed it, because I think for me, talking about things is certainly more beneficial to my trading strategy than just analyzing in the vacuum that is my mind. So, And I didn't actually really realize that, the 3 is a crowd here on these trends. And
Right.
I'll be honest with you, every time I try and, ride the 4th trend on something like this is when I get killed all the time. So I've learned my lesson, and I probably won't be, immediately shorting if we run up to 27, or possibly, we could also, if we run up here, we could run these highs first, maybe tap, 28, 7, 29 on a crazy candle day. Don't act like that's not something Bitcoin likes to do. But it would be very, very, like, people talk about max pain all the time. Yeah. And I think max pain is something like what happened yesterday, where, I don't think max pain is down only or up only, because if you know how to trade, you just ride the trend. This is max pain, is when longs get rinsed and then shorts immediately get rinsed after. And if you kind of think about that perspective, it's the same thing here. Shorts are going to get murdered. We squeeze up. Everybody gets long. Woo, we broke the 200 estimated moving average. We're moving towards 29K. And then we sweep this high and then just drop like a rock down to, and sweep either these lows or possibly, somewhere down here. So that, in my opinion, is max pain, because nobody wins except for a very few.
Yeah, right here. If you don't mind me real quick throwing this up, liquidation chart, like you said, rinse both sides.
Yeah.
It wasn't a whole lot, almost 10 million on each side, but it was longs and shorts. They both got wiped to the same degree. It was like, that is max pain. It's not when max pain doesn't occur when one side's winning. Max pain occurs when everybody's losing.
Go back to that chart, Monte. I was what was the other day? What was that date on the big short lit day with both sides? That was the 29th.
Yes, this is the 29th of August,
which was the grayscale day.
Yeah, so this was the grayscale day. You can see the reflection in price here with the yellow line. And then here were all the long liquidations that occurred when people expected us to continue to grind higher. And really, we can thank these $25 million worth of longs for sending us back down to the previous price. So, we had the short liquidations. And again, this to me is max pain as well, because we had the short liquidations prior to the news, long liquidations after the news. People tried to chase the news and they got hurt. People tried to, front run what they couldn't really see coming, or not even front run. People were short Bitcoin and they got squeezed out because of news. And, so just, that's max pain. It's not when the market's trending one way or another. It's when both sides are losing, and that's what we're seeing right now.
Yeah, what makes me think another move is coming. We should see something interesting. I don't know. I don't know if it'll be this big, but we did kind of discuss the idea of what a big news event, or if we break above 26K with strength, we could see some buyers enter. But this was the grayscale open interest, and as you can see, open interest dropped further after that event, which means a lot of people either got rinsed or exited, and that's my one big trade. I'm going to go on vacation or whatever. We're starting to see a gradual increase, and I kind of want to see it kind of pipe up towards like 90K or 95K before I think a big move will really occur. Maybe $1,000, $2,000 candle, but this is also something easy to watch. And if you have TradingView, open interest auto, the Spaceman BTC, this will actually work on a lot of assets. So it's worth keeping an eye on, because as you can see, after open interest disappears from the market, and we had 95K down to the low at 81K, so 14,000 Bitcoin wiped off the open interest, we've been freaking flat in a couple $100 range. So when open interest leaves, just the general interest in Bitcoin, which causes the volatility, leaves as well. So once that open interest starts to seep back into the market, eventually there'll be enough players to kind of force a large move on either side. And that's also something to watch out for. If you're kind of like, when's the volatility going to come back? Well, once we hit like 90, 95K Bitcoin open interest again, 8Ball says, we should see some sort of large move in the future. So that's also something worth watching out. And shout out Phoenix for saying hey in the chat. Always see you around. So we appreciate you, Phoenix. But with that being said, I mean, it's the same story for ETH, so I'm not going to spend too much time on this. But ETH is ETH is, I think ETH is in a worse position, being kind of stuck underneath this low from back in June. And the price action is, still trending lower. I guess you could kind of call this symmetrical triangle. Symmetrical triangles typically will continue their trend. Doesn't mean it will, but it kind of signals lower, and the fact that it's stuck under these tweezers right here certainly doesn't give me confidence. So I think I'd probably be more interested in trading Bitcoin than I would Ethereum, just due to what I'm seeing on open interest, what I'm seeing on volatility. But if we go back to our favorite chart, Monte ETH BTC, there hasn't been much happening, since we were talking about it earlier in the summer. Still very flat. I think we talked about the 0.065 level being where we would want to really start digging our teeth into ETH. And below, 0.62 is where we're really ditching ETH. But hasn't really given me a signal either way. How about you?
Yeah, no. And it looks like it could be a month to 2 months before it's forced to move in either direction based on this technical pattern on this wedge. Like it looks like we could go until like Thanksgiving time before this chart breaks out in either direction. So, I don't necessarily expect too much volatility from this order pair in the future here. I think we complete the formation of this wedge before we get a move. And really that kind of lines up with like the middle of November, maybe beginning of December. That's when I could see some volatility coming back to this market.
This is a year-long trend. This trend started in the 10th of September or the 8th of September on 2022.
Yep.
That's crazy. And I mean, I guess you could maybe draw a descending a wedge, I guess. Yeah, technically. So I'll keep this wedge kind of chilling right here because it'll be interesting if we do drop lower. But if you're kind of considering this also a descending triangle, that is also bearish. A wedge is bullish on a break up out of the wedge, but if I kind of remove the wedge, then that is a bearish formation. So that's also just something to consider. But like Monte said, we could literally sit until the 14th of November in this, and possibly longer, because a lot of times when the crappy assets have nothing going on for it, they'll just do something like this, and then
exactly
like that, and just make even more pain. So this could be a Q1 2024 type of trade, but we'll obviously keep our eye on it for all of you guys. So unless anyone has an asset they want us to chart, like we said, we'll do some autos, we'll do Apple if that's what you want. But obviously, the Apple story is they said one thing, they could say more. Consumers could react. I don't really know, but I think probably be patient with Apple is my best story. And then if you are trading autos, if there is a likelihood of a strike, I would expect them to seep lower into the strike and potentially during it. And then, with a good strike news, leaving, if the strike ends with good, amicable agreement, then I would expect the autos to then kind of recover some of that. And it's important to remember Tesla is not they don't have a union for any of their workers. So if you are, shorting Tesla on this news, then I don't know what you're doing. So, but I think that's it. Is there anything else you wanted to talk about, Monte?
No, I think we covered it all today. Not a whole lot going on, but still plenty to prepare for. And I think, like you said at the beginning of the show, at times like this, you need to start preparing for multiple scenarios, because there are like many different scenarios that I could see playing out here, and I want to be prepared for all of them and know what to do when a certain price is hit. And basically that's what I'm preparing for. So going to keep an eye on DXY and that 105 level. Of course, I think that'll be very critical. And also keep an eye on open interest in Bitcoin and ETH. And of course, that Bitcoin or that ETH BTC chart will be important as well. But that's all I got.
Word. Yeah. One final thing I wanted to mention, just because you did talk about like gearing up for some trade ideas. And one thing I am looking for in case we don't pop higher is a sweep of 25.1. If we sweep 25.1 and reclaim 25.1, I'll probably launch a pretty sizable long with a stop either at the low or at 25.1, depending on what the reaction is. And then if we drop into, the low that I have marked out here from back in June, which, obviously is part of this larger trend, if we drop that low and recover back above 25.1, I will then also long that. So just because it has to sweep either 25.1 and reclaim 25.1, or sweep 24.8 and reclaim 25.1, because that also goes with what Monte and I said, in relation to the lack of bearish price action. A sweep is not bearish. A sweep is testing liquidity lower, buys come in, we push higher. So that's what I'll be looking for if we do see some more downside price action in the near term. So,
yeah. I wish it was 2001 again. Build me a time machine and send me back to 2001. Things are much
I heard 2001 through, honestly, the 2000s were elite. Let's not get it twisted. Some fantastic movies, great music, some good times all around.
Yeah, and we could have stocked up on Bitcoin in 2008, and we would be.
You weren't buying Bitcoin in 2001, Monte? You're late, bro.
Yeah, you beat me to it with your time machine.
Yeah. Alrighty, everyone. Well, that's it for us. We don't have CJ here, so our graphics are not perfect. But if you do look in the YouTube chat, we are working with both Dydex and BingX. So Dydex, decentralized derivatives exchange. BingX is a centralized exchange. So depending on what you like, what your risk tolerance is, do check out both of those. Dydex, you get 5% off fees and earn Dydex while trading. And BingX, you get up to $5,000 in rewards for meeting some quotas trading on there. We both trust them, and they are both awarded. And then if you want to hang out with us in Trade the Chain, we have a 14-day free trial at www.tradethechain.com. So you'll get access to our community, emails, data dashboard, and of course, Monte, CJ, and I's daily analysis for free. If you sign up there for 14 days, then you gotta pay us. But I think you'll like it. I think you'll love it. Everyone does in the community. So with that being said, good luck, happy trading. See everybody next week.